Good afternoon and welcome to this month's webinar, Business for Sale, an introduction to the process of successful business sale or acquisition. Today's webinar is hosted by North Star Strategic Partners. First, a little bit about North Star. We are a team of business strategies focused on helping your business increase profits, and we also ask the questions that you may not think to ask and examine the issues that may not always be at a surface level. North Star has helped numerous customers achieve, grow, and maintain prosperous businesses over the years. Our speaker for today is Wendy Roberts. Wendy prides herself on creating winning strategies while helping her customers maximize their resources and their profits. As a CPA, she knows her way around corporate financial. As an entrepreneur, startup CFO, and CEO for North Star Strategic Partners, and a former corporate executive, Wendy offers a broad insight into finding solutions to help her customers achieve exceptional growth and financial success. Wendy is originally from the Midwest, and she was raised in a working class family. One of her most favorite and cherished hobbies is cycling. She never fails to miss a weekend cycling in the Bay Area and taking in the panoramic views. Wendy also has a bachelor's degree in accounting from Indiana University, MBA courses at the University of Tampa, and years of experience counseling customers on financial and profitable success. So at the end of the webinar today, we will be sending you an email that includes a copy of an ebook, Famous or Rich, short survey, and a copy of the recording. All questions will be answered towards the end of the webinar. So let us hear it from Wendy.
Thank you, Shai, and thank you for everyone joining us here today. It is a little bit windy and blustery here in the Bay Area, but wherever you are in the world, thank you. We have some folks joining us from North America, so good afternoon to you. We have some folks joining us from Europe, so good morning or good evening to you, and good morning to those in the Philippines and etc. in the Far East. Okay, so a little bit how we're going to do this. The first part of the webinar, we'll talk about the actual process of selling a business. And then we'll get into some of the higher level aspects of what types of businesses are sold. And then third, we'll look at what are some of the successes and failures of selling a business. And then finally, we'll get into the Value Builder program that we highly promote to help you plan before you ever think about signing on your business. And then we'll go into question and answer. So, what are some of the seller's goals when they're getting ready to sell their company? First might be that you're ready to retire and you want to go on to your next chapter in life. That's perfectly fine. You've worked really, really hard for your company and you want to make sure that you get the maximum value. The second might be that you want to sell to your kids, perhaps, and you want to do estate planning. That's so very important to be able to plan that out. A third might be you want to sell to your employees because they have been devoted to you and you want to have that legacy for your company. There might be other options too, like you want to expand and grow. Maybe you want to sell part of your company so that you can get some capitalization. We're currently working with a client in that situation in which he is looking at getting investors from a publicly traded company. And we have another company that we're working that is looking at potential infusion of cash from a group of investors here in the Bay Area. So there's all different things that can happen as you progress through and you start thinking about selling your company. So what's the first step that you do? And if you look up here in the purple area here, it's the decision to sell. And the starting point is usually what is a valuation or what might be the sales price or the range of the sales price that you can garner. Now, we'll talk about the Value Builder system in a little bit and how the Value Builder can help increase the valuation of your company and garner you more money than what you would be able to do if you did nothing at all. So the valuation we usually do either it's an asset allocation or revenue or market. Those are usually the three types that are combined in order to determine the valuation. We usually look at last 3 years plus the current year and maybe some projections. So all of that goes into determining what the value of the company is and what you might be able to garner in the marketplace when you're ready to list it for sale. The second step is getting ready for due diligence and your tax planning strategy. That's so very important. You want to be able to know how you're going to exit the business and what it's going to cost you in terms of the taxes you're going to have to pay to the states and to the federal government. Tax planning is so very important. There's different strategies that you can use, like the deferred sales trust, maybe a charitable remainder trust, maybe an installment sale. There might be other things that you can do in order to be able to maximize the value that you return and still be able to meet your tax obligations. The due diligence is also an important process in which it looks at what you have, where's the status of your company, the financial performance of your company, and we'll get into that a little bit later. And those questions that are going to be coming from the buyer when you are actually sitting in front of that buyer talking about the company. The next is called the confidential information memorandum. And a lot of business brokers and M&A advisors, they use this or similar to be able to display to that potential buyer what your company is all about. Who's your key competitors? What's your employees? Who are they? Perhaps who are your major vendors? What's your financial performance? What's the history of the company? There can be a lot of information in this confidential information memorandum, and it is that confidential, and it's not given to anyone. We'll get down into the process of that winning strategy or that winning uh, offer, and then what happens from that. Okay. Then the next one, we're now going into the pre-market, and that's the buyer research. Once we identify what the value of the business is, what is it that we have to offer and present to that buyer, then we start doing what's called buyer research. Who is your ideal buyer, your company? Is it a strategic positioning? Maybe it's selling outright to an individual or to a group of individuals, as I just mentioned on some of the examples. It could be a publicly traded company. So those are the research that you do to look at the buyer will help then set the framework how you're going to be positioning it from a marketing standpoint. The next area is your team building. And this is so very important. We all know it takes a village to raise a child. We all know it takes a village to build and sustain a business. It also takes a village to sell a business. So you want to make sure that you have a good attorney on board, someone who understands business law. You might also need an estate planning attorney. You're going to need a financial planner deciding where you're going to invest those funds after you exit your business. You're going to need a good CPA. You're going to need a consultant like us, and then you're going to need a broker or M&A advisor to help you go through this process. And there are other key players that will be happening as we move through this wheel here that you'll be wanting to consult with to make sure you're getting the best value for your efforts as well as the best advice. So then the next step is going to market, where you would contact buyers. Now this can be done by email, by phone call. There might be through networking opportunities. It could be listing it on BizBuySell or some other venues. But contacting the buyer is very important. That then starts generating interest. Once you start generating that interest, then buyers will be coming to you and you will ask them to sign an NDA, which is a non-disclosure. So at that point, that's where we're going to start giving them the information from our confidential information memorandum. So once they have looked over everything, then they say, okay, I have an interest. So we start talking to them about different things about the company and et cetera, et cetera. Once, and this could be multiple buyers talking back and forth on with you about pricing, et cetera, the business. I mean, this is a back and forth negotiation process. And once you have actually gone through that, then you come to what's called a letter of intent, or what we would call the winning offer. So at that point, that's really important, where the lawyer gets involved, or your M&A advisor, or business broker. The winning offer then becomes that purchase contract. And it's very much like buying and selling a home. You've got the buyer and you've got the seller, and you guys negotiate on price. Next, once you have that signed contract, then we go to what's called the due diligence from the buyer's standpoint. Now, we'll talk about some of the successes, what causes a successful sale of a business, and what things are going to perhaps cause a business sale to fail. We'll get to that in just a minute. So the due diligence process is where you have been preparing for that up in the decision to sell cycle of this wheel. Now it's the buyer asking the tough questions. Your financial performance, your employees, do you have key employee contracts? Who are your customers? What's the diversification of your customers, etc. All of that is very, very important in what the value could actually garner you when we talk about the value builder in just a minute. The next is closing the deal and the financing. So what does that mean, financing? Well, it could be an SBA loan, either a 7A or 504. It could be a cash buyout. That's very possible. We've seen transactions like that. It could be a combination of both. It might be a stock sale. Whatever the case may be, the financing or the negotiations on how you're going to get paid is very, very important. Then the last step, and the most important step, is that you go to escrow. Now, this is usually a third party. It can be an attorney. The third party would then make sure all the I's are dotted, all the T's are crossed, making sure that all of the notices are posted, etc. They then help go through this process for both the buyer and the seller. And what's important about this is once this is all done, then you have the transfer of ownership from you as a seller to the new buyer. So let's talk about on the next slide what those types of acquisitions can look like. Now, these are very basic. They can be a combination of some, especially in the stock purchase. But the two main types of business acquisition are asset purchase, which a lot what we call Main Street companies, $1 million or less, are usually sold as an asset purchase. This is where the buyer would purchase the assets of the entity, which might be an inventory, intellectual property, fixed assets. It may or may not include cash or accounts receivable, but it could through negotiation. The second type is the stock purchase agreement. And this is where the buyer would then purchase the stock of the entity. So keeping in mind that the buyer assumes the liabilities as well as the assets of the entity. And this is very important from a buyer standpoint because you need to understand that the liabilities go with it. And an asset purchase is only the assets. Now, stock purchase can be 100% or it can be more than 50%, it could be less than 50%, like the example that I gave to you earlier in this webcast. One of our clients that we're talking with is deciding on a 10% stock purchase. And we are advising him and consulting him that particular purchase. Then, depending as how things go, right, when you're doing your due diligence, I want to point out that transparency is so important. If there are some hidden skeletons in the closet, transparency now to say, hey, we had an issue with the IRS or whatever the case may be, it's important to be open and honest about that from the get-go because in due diligence, they're likely to find it. And so if you are not transparent it's possibility that the sale of your business could fail because it automatically gets a red flag to the buyer. Another area that might make a failed transaction would be that you're advertising too early. And we'll talk about what that means here when we talk about the value builder. So it takes about 8 to 12 months to sell a business. You need to be planning for that at least 12 to 24 months before that. Another area is not having your financials up to snuff. That's a huge red flag for a buyer, especially if they're going to be combing through your books and records and looking to see what you actually reporting process, are your cash basis, are your accrual basis, etc. That can be a very big red flag for a buyer. Now, on the flip side, when we talk about what makes a successful sale, being prepared, as we talked about in that first part of that wheel, being prepared and being ready for that due diligence, both internally and externally, is so very important. Having that team that we talked about in order to be able to advise you, they'll be able to help structure this success for you. Completing that background is so very important. So it gives you a starting point and you know where you're going. And then closing the transaction and making sure that you have done everything you possibly can to ensure that that transaction is a business success. So let's talk a little bit about the Value Builder system. North Star is a certified Value Builder implementer. We believe in this. It talks about the 8 critical factors that will look at your company's value and how you can increase them. This data has been presented with over 60,000 businesses sold in North America. 60,000. That's in the US and Canada. And so, why this is important is if you look at each one of these 8 critical factors, and I'll go over some here in just a minute. If you score 80% or more per factor or per key driver, you have up to a 71% chance of increasing the value of your business dramatically versus if you did nothing at all. So let's talk a little bit about these key drivers. The first one, obviously, is financial performance. How robust is your financial system? It can be QuickBooks, that's okay. It could be NetSuite, that's okay. But how do you utilize that accounting system and being able to have functioning financial statements, key performance indicators, all of the things to be able to present to that buyer that you have a solid financial system in place. The second is the growth potential. What is the future streams of revenue that you have for this business? We'll talk a little bit about service versus product. So if you're a service business, you might want to think about productizing your service so that it makes it easier for the buyer to comprehend, and it's also easier for your customers to comprehend. The next is the Switzerland structure. Now, this is a little bit of a terminology that may not be familiar to many of you, but what this is what is the diversification of your customer base, of your vendor base, of your employees? So in the case of a customer, do you have more than 15% of your revenue being generated by one customer? If that's the case, then that could be an indicator to the buyer that you're not very well diversified. The next one is the teeter-totter, what we call the teeter-totter evaluation teeter-totter. So basically this is your business a cash spigot or is it a cash drain? Does it drain the money? Do you have to put money into the company? It really is not very valuable to a buyer. However, if your company is a cash spigot or generating a lot of cash, that's very valuable to the buyer. The buyer's looking at what is my return on my investment. A key ratio of this is what we call the working capital ratio. And banks look at this as well as buyers. It is your total current assets divided by your total current liabilities. And that's measured on a 1-to-1 ratio. So if you're one to one, that means you're break even. You have just enough of your current assets to cover your current liabilities. However, if it's 5 to 1, 6 to 1, 7 to 1, that tells the buyer that you have a lot of cash that's being generated by your business. You're way more valuable. The next one is recurring revenue. And as many of you have seen with some of the software companies and also other companies, product companies, the recurring revenue is one which we would call, like, let's say, a subscription revenue, where you are generating revenue monthly every single month over a year or 2 years or whatever the case may be. Recurring revenue is very valuable to a buyer, and it's also valuable to you because it generates a lot of cash and continued cash flow. If you have contracts that with the government or with a large entity that are 12 months or longer, that again generates that monthly revenue. It's super important for a buyer to consider you for evaluation and paying you more money for it because of it. The next is monopoly control. And I look at this as with the comment from Warren Buffett, and that you build a moat around your company. And this is where I mentioned earlier about service industries maybe productizing your services. Creating that monopoly within your industry makes it much more harder for competitors to come in and much more valuable to the buyer. Next is customer satisfaction. I think this is probably common sense, but the higher the customer satisfaction, the longer they're going to stay with you, the more valuable you're going to be to a buyer. And then the last of the eight critical factors is the hub and spoke. Now, the hub and spoke talks about how dependent is your business on you? Do you have standard operating procedures? Are you able to move away from your business, go to Hawaii for 2 months, and come back and find it the same way that it was, or if not better? The hub and spoke is so critical that it is, I consider it one of the most top, besides financial performance, the eight critical factors. Because a buyer wants to know, once you leave that business, will it continue to operate and generate the cash that the buyer is actually paying for in and looking for in that ROI? So, as I mentioned, North Star is a value builder implementer and a certified value builder partner. So, I want to talk a little bit about what North Star can do for you in addition to the value builder. We actually have a strategic coaching or advising mechanism within our company. It's called the 4 points of focus. And each one of those 4 points we consider is critical and instrumental in building not just a good company, but a great one. The next is that we offer CFO on demand services. As I mentioned to you, I've been a CFO for a startup. That company, I've been a CFO for several little startups. One of them we actually sold to a publicly traded company. I've also been able to have the pleasure and being able to experience actually having a company go public on the opening bell of the NASDAQ. So looking at, those factors that we can offer to you, we also have a robust cash management system. We use Profit First implementation. We're certified Profit First, but we also have other tools to help you maximize your cash flow. Cash is king. If you don't know how to manage your cash, you cannot be profitable. The next is we look at evaluations of your standard operating procedures, as I mentioned previously in the hub and spoke. That is one of my top key factors. Do you have everything documented that needs to be documented in your company so that you can sell the business and maintain that value? And last is key performance indicators, key ratios. I mentioned one of them to you already, the working capital ratio. The gross profit margin is also important, the net profit margin, as well as several other key factors in measuring the success of your business. If you're ready to start but you're not sure where to begin, it's really simple. I offer a 30-minute free consult. I encourage you to start thinking about looking at selling your business, as I mentioned, it takes 8 to 12 months to potentially sell a business. It takes 12 to 24 months to plan it out. So I would encourage you to reach out to me. This is my contact information. We'll be more than happy to send you the Value Builder survey. It will gauge you of where you are and your company is to these 60,000 entities. And we can tell you, okay, given this score, what you can work on. What are the top 3 things I would recommend for you to work on to increase the value of your business? It will also give you a pretty good feel of what the value of your business is compared to those 60,000 companies. So, again, if you would like to understand what your company is worth and where you score on this value builder, I'm more than happy to send it to you free of charge. And I will give you a 30-minute free consult and we'll go over everything with you and help you answer any questions that you may have. So, with that, I'll turn it over to Shai for some questions. And I want to say again, thank you. Your time is very valuable. I appreciate you. And yes, do reach out to me. I'm here to help you. Thank you.
Thank you, Wendy. And we have a couple of questions that came in today.
Okay.
The first one that we have is, how soon should I start planning the sale of my business?
Okay, great. Yeah, as I mentioned probably 2 or 3 times in this webinar, it's never too soon to start planning. If you don't have a succession plan, please get one. If you need help, we can help you. Succession planning is so important, especially when we're talking about estate planning. If you have siblings that you're in business with, if you're in business with your parents, if you're in business with, you want to have your kids in the business, employees, whatever the case may be, succession planning is super important. I recommend 12 to 24 months of you start planning, and that includes your tax strategy as well as the other things that we talk about in the 4 points of focus, as well as the value builder system. It's so very important to have that in place. Think about it like this. It's very stressful to sell a business. But if you had the planning in place, the key indicators of what it's going to take in order to increase the value of your company, doesn't that give you a lot of relief that you don't have to worry about sleepless nights and trying to sell your business? That's what we're here for, to help you get through that process. After all, as you saw on that wheel, it's a journey selling your business. Why not be well prepared?
Thank you. And another question that we have, what's the range of business size that you most want to work with?
A great question. That's a really great question. So we like to work with companies in $1 million in revenue, up to about 25 million. It can go a little bit higher, but that tends to be the sweet spot for the value builder system, as well as what services we offer with our 4 pillars, with the 4 points of focus.
Thank you. And a few more questions. The next one, what will be the process if one of my employees want to buy my company?
That's a great question. So it very much resembles selling to a third party. You're going to have a attorney involved. I would highly recommend getting an attorney. Do not try doing this by yourself. A business law attorney is really good. I have great recommendations for business law attorneys. They can help you figure out what the best solution is and what the time frame is. Is it going to be a vesting schedule over a 4-year period? How long are you going to stay in the business in order for that transaction to occur? Those are key questions that we can help you answer, as well as the attorney.
Thank you. And I guess we have one more room for another question. The last one
Okay.
will be, how will I tell my employees that I am selling my business or my company, and what are the possible impacts that this decision may have on them?
Great question. I would say don't disclose until you absolutely have to. There are probably going to be some individuals in the business that are your key players that you would want to tell. I would also suggest that you might want to get retention bonuses in place, retention contracts when you do have that transition that occurs from you to the buyer. You want to make sure that those employees are staying with the company because they have the knowledge. right? They know how to run the business. They have the history. You have your standard operating procedures, of course, but there are experiences that you can't necessarily replace right away. So it's very important to have those key employees documented in some type of contract situation. And I would say keep it to a minimum if possible. And M&A advisors, business brokers, consultants like ourselves, we're very discreet. We understand what that means.
Thank you. And Wendy, we have another question that just came in.
Okay.
This is about marketing. How do you help in marketing a business to potential buyers?
Great question. Okay, well, I'm going to tell you what we do. That's one of our 4 points of focus. And one of those is marketing. The second is finance. And we talked about profitability, scalability with the ultimate sale acquisition. The third is operational excellence with technology, making sure you have your standard operating procedures in place. And the last one is people, having the right people and sitting in that right location, that right seat, as well as having an engaged team. Now, getting back to the marketing, we help you determine who is your ideal customer. This is very strategic. Who's your ideal customer? What does it cost you to obtain that customer, and how do you do it? So, knowing who your ideal customer is going to be able to market to them, which is going to increase your sales, which ultimately is going to increase your revenue. If you don't know who that is, you're not going to have a very viable company.
Thank you. And those are our questions for today, Wendy.
Again, thank you for everything that you do, for all of you on the call. Some of you are consultants, some of you are business owners, some of you are others in other industries. Thank you for your time today. I really appreciate you and who you are, and let's keep working together to make this world a better place. Thank you. And with that, good evening.